Hello, Maverick traders, and welcome out to your daily market roundup. This is Songit here, and I'll be breaking down today's market price action and talk about our upcoming 24 hours. It's a Wednesday, February the 5th. Let's get into it. As always, we'll be breaking down today's market price action by looking at broader markets, take a look at what the currency basket is telling us, take a look at the news, and then most importantly, talk about our upcoming setups here. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So jumping into the market analysis, let's just jump right into the headlines and numbers. Well, here's the theme right now. The equity markets, they continue to recover. So we had that big sell-off or the gap lower on a Monday, and then we've seen recovery since then. We haven't had any negative news to really affect the markets. Seems like we had a whole lot in that very short period of time from Wednesday till Monday. So as the things have gone quieter, we're seeing the markets kind of returning back to normal. The equity markets continue to recover. And then we also have a continuation of that pullback. The dollar continues to pull back and the yields pull back as well. So we're seeing things sort of coming off from those levels that we saw going into the weekend. So that trade is continuing to play out. So here's the percentage change. So you can see that the last 24 hours, it was really the dollar that was a big mover. You can see dollar just had a continuation of that move. But it was the yen that had the best move overnight against 0.74%. Again, this was mostly driven by some wage growth data that came out yesterday evening in the Asian market at 6:30 p.m. Eastern. And pretty much since then, we saw that big rally in this Japanese yen. So all the yen crosses did really well, and especially the dollar yen. And you can see that outside of that, the currency basket's not really, it's not really a big screaming buy or sell. I mean, Canadian dollar, I want to talk about it because, we had that. We had that tariffs that got pushed, but then you can see that the CAD's not really having a follow through there. Now against the dollar, again, if the dollar is weaker and the CAD's weaker, we saw a bit of a weakness there. But as a basket, Canadian dollar is not really extending those gains. So we'll take a look at the Canadian dollar basket as well, and then you can see that some of the relative strength is in those growth currencies, Aussie and Kiwi, because again, the market sentiment is positive. Those currencies do well in those environments. Now, if we take a look at the broader market, so S&P, you can see that it's not a big rally, we have seen before where things are rallying up like 2-3%. This is a slow, gradual recovery. We're seeing the world markets up as well, crypto markets up, but then again, and gold market continues to rip higher. Again, you want to talk about something going parabolic. Gold is the one. That's a big move in the gold market in the last, pretty much at the beginning of the year, we had all-time highs, and we're pretty much breaking all-time highs every single day. Now here we are with the U.S. oil, and you can see that we had a bit of a negative day today. Now, if you just take a look at the crypto, you can see, the main crypto that I'm only following here is Bitcoin. You can see that Bitcoin is slightly down. Bitcoin Cash is slightly down. Ethereum and Litecoin is up. But again, I'm just looking at Bitcoin as what it's doing. It's not really breaking out higher, and it's not really breaking down lower. So it's just kind of stuck in the middle there. So as far as the outlook goes, where do we stand? What do the charts tells us? Well, the chart just tells us that, hey, we still have the resistance in place. We had a massive gap, which we have a nice 3-day recovery. And, if you take a look at a lot of the charts, they kind of look similar as well. We got that 3-day recovery, and we'll probably see a pullback in some of those dollar crosses and some rallies and some dollar crosses. You'll probably see similar candlestick price action. So again, this is just telling me that, the markets are more sort of correlated right now, where the broader market themes are running the markets. Now, if you take a look at the schedule here, so yesterday we had the unemployment rate the employment report from Kiwi, you can see that that was in line with expectations. So it really didn't see a big move off of that. All that strength that we saw in the Kiwi is all sort of related to, thanks to their the broader markets that's really in the markets here. And then here we are with the ADP numbers employment report from this morning. And you can see that that was better than expected. But now if you take a look at the dollar or take a look at the yields, did they really help those areas? No, it didn't. So we'll probably have to wait till Friday to see the bigger reaction to those numbers. Next 24 hours, we'll be taking a look at this Bank of England rate statement. They're expected to cut rates by 25 basis points. And that's what is expected. So we'll see what not only this is important, but then also what it says in the statement. Is this a hawkish sort of a cut, or is it a dovish cut? So remember, you always got to keep that in mind, that we can get an outlook, but that could come with this hawkish or dovish statement. A hawkish statement would be like, hey, we probably will cut here, and then we probably would not cut until we see something. Now, that's a little bit better. Now, sometimes we'll get the guidance where it's going to cut, but then, further rate cuts are coming. So that really, start to extend that decline. So I think it's the statement that we're going to take a look at. It's right at 7 a.m. In the morning that's happening. So we'll be taking a look at those pound crosses. I've kind of talked about like how I'm kind of be keeping the powder dry on the pound, because pound is not really moving significantly higher or lower. And we'll take a look at it when we see the currency baskets. So let's jump into the currency baskets and take a look at where relative strength weakness is.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at relative strength of weakness, I want to start with two things: dollar and the yields, because there's a lot of things moving right now, but primarily if you just take a look at the charts, where has been the biggest move? The biggest move has been in the dollar. The biggest move has been in the equity markets, and then we've got a big move in the bond market. So let's take a look at it. So one of the things that I've talked about in this entire phase is that, hey, dollar is not a great buy or a great sell. And that question really comes is that, hey, is anything changed? Am I supposed to change the outlook there? You can see that this thing has a support right here. We got a resistance right here. Now this candlestick was a big reversal candle. So this is a nasty reversal candle. You can see kind of closing the lows there, and then pretty much since then we have a 3-day decline. So the real question is, where do we go from here? And then most importantly, are we now looking at dollar more on the bearish side than the bullish side? Should we start to sell the rallies instead of trying to, buy the pullbacks? That's a very important distinction, but that we need to kind of decide, is this a trend change? So if you just take a look at the chart, you can see that we are right at the support. It's a 3-day decline. And, we haven't really broken that, but we did break this to a moving average here, the 20 and the 50 moving average. So if you really go with the trend score, this is giving you a -2. So, for the shorter term, I think this is the right call, that dollar is more under pressure. Now, let's just take a look at the 4-hour chart. Let's see what that 4-hour chart is telling us. Well, yeah, it's confirming, we got a drop here, got a bigger reversal, a drop here, and then pretty much a continuation here. So it's a 3-day decline. Now, is it better to short here on a 3-day decline, or is it going to have a bounce? So, I mean, it's pretty clear that it is in this little downward pressure here. I won't be surprised. I mean, you can see that we did sort of pierce through that level but then close above it. Now, I would love to see that if this is going to break. Or the best pattern, I've said that yesterday, would be like if we see a bear rally or we see that continue the consolidation. Yesterday, we were at the crossroad here because we were right there. We were right there at the 20 moving, 50 moving average, and we were kind of debating, should we short here or or not. And clearly, lo and behold, we had a breakout here. So again, if you look at the chart, look at everything, I think probably want to see, selling those any bear rallies as we see in the dollar probably get sold. And that's what will give you a confirmation that now we are seeing more downward pressure. Now, let's just stick with the bond market, what the bond market is telling us. You can see that the bond market's also moving along the lines. This is a 10-year bond yields, and you can see that along the lines, same time that we see a dollar break, we're seeing the yields sort of break too. So this is where I think it's, there's more forces behind it that's, giving you a confirmation that, hey, maybe now it wants to go lower. Now, the only question is, the entry points. And like I always say, look for bear rallies and look for setups to short into. So those are the two. So let's just take a look at other currency baskets too, and then we'll take a look at some possible setups. So that's what the dollar is doing. Now, let's take with the yen. You can see that yen is now right back at the resistance. The only issue with the yen is that this is a volatile play, meaning that it goes up one day, but then it's going to have a big correction. It goes up, it's going to have some corrections there. So overall, the theme is that buying pullbacks is it's a better trading strategy here, instead of trying to buy the breakouts, because breakouts can easily turn into some pullbacks. So this is how this is moving. You can see that these are big ranges where it goes higher and it pulls back. It goes higher and it pulls back. Now that's the price action you're dealing with. So when you're trying to decide, okay, well, this is the direction I'm looking at, also keep in mind is that what is the overall price action? And the price action is, pullbacks to buy into, pullbacks to buy into. So on a 4-hour chart, you can see that we're kind of making a lower high here. So the question is, does it continue to go from here or does it roll from here? But on a daily chart, you can see that we are right up against that resistance. So clearly, if this breaks out higher from that, it's going to have a big impact. But at the same time, it's not a confirmation yet. So, the question always comes down to is that, should I wait for confirmation or should I just enter anticipating that? And a lot of times you go do back study and you sometimes realize, hey, I should have just waited instead of just getting in. And there will be times where it just takes off. So it's it's like a two-way street here. But overall, I think it's better to kind of wait for confirmation for that. But we definitely have this dollar sort of pullback here, which is supporting that outlook here. For maybe dollar yen to continue moving lower. Now let's take a look at the Swiss franc. You can see that Swiss franc. This is, again, not a great currency. I've said that before. 4-hour chart, you can see that the relative trend of weakness continues to pop back and forth. So not a consistent currency pair. It doesn't mean what happened today will reflect into the price action tomorrow. So that's what you're dealing with here. Now, let's take a look at the euro. You can see that euro has definitely changed and turned into more relatively weaker currency. So this is why it's really important to kind of keep an eye on the momentum. So you just trade with that momentum. Over here, the momentum was up. And now, momentum is down. So I do definitely like more euro on the short side till the momentum gets better. Now, pound is the one that, we are watching for tomorrow. And I've said it yesterday. Hey, but let it, it's not really a great buy or it's not a great sell. And you can see that it just, it did just break out to only fall back into this little range here. So I think this range will be decided tomorrow. But for now, I think we'll just take a look at some of the pound crosses for different scenarios. If I take a look at the daily chart, well, you can see that this did rally. We had a massive drop. You can see this was a massive drop. But if you look at this price action here, it hasn't really made a higher high. It actually made a lower high. But again, is it ready to roll over yet? I don't see it yet. So I think it's just stuck in that, if you look at the daily chart, in the 20, the 50, we're kind of stuck in between. So we'll find out when it does break, but just realize that right now you're dealing with a little wide range here. Let's start with the CAD. Now, if I take a look at this daily chart, this is where, this look more like a bear rally to me from a textbook perspective. We got a big candlestick here, a big rally here, but then again, it did not break above it. And we have this bearish engulfing candle. So on a Canadian dollar basket, it's not a great looking candle that you want to see for the continuation. And I personally think that the CAD, again, we got that deadline push. So we got a big relief rally in CAD and big relief rally in the dollar. But I think this tariff stuff is still going to linger for another 30 days. So when the deadline is still there, shorter term A reprieve doesn't mean that it's out of the woods yet. And I think that's just going to continue putting the pressure there. But so again, not loving the price action today in the CAD. Like I said, this looks more like a little bear rally to me. How do I get a confirmation? Well, you can see that on a 4-hour chart here. It's rolling over. So the question really is that, does this recover? If this falls below these moving averages, then again, I think CAD's probably done for now. But if it just stays in this and try to break out, now that's a reversal pattern where it made a higher high, you make a higher low, and then we make another higher high. So I wouldn't really rule out that possibility. I know the daily chart is telling otherwise, and then the 4-hour chart is telling another story. So we'll find out which side will win. But again, it's going to be largely dependent on what happens with the US dollar. Now, some of the other interesting currency pairs are like the Aussie and the Kiwi. And you can see that the Aussie and the Kiwi, have they broken out? No, they haven't broken out. They're still range bound. So one of the things to kind of keep a close eye on is that we are still, below these moving averages. So there's still some technical pressure that we see. And usually, Corey always says that, hey, let's just wait for those levels to clear out. I don't want to buy a breakout, into those resistance levels. And I think that's really where the Aussie is. But again, I have no doubt that if it gets above it, I think that we'll have a positive momentum going. Remember, like we had such a negative momentum here, and then we went from a negative momentum to a sideways momentum. So I think this is ready to go either way. Not yet. Again, now if I take a look at the 4-hour chart, now this is where you can say that, well, look at that. It's above the 20 moving average and it's above the 50 moving average. Maybe it's going for a reversal. Again, there's different possibilities. So question is that, should I wait? Or should I, should I just enter here hoping that it breaks out? And like I said, it's there are times it works out great and there are times it's not. Now, remember, we still have those issues with tariffs with China. So if those issues come up, guess what's going to happen? It's going to hurt the Aussie, it's going to hurt the Kiwi, and then it's going to help the US dollar. So, we are in this environment where, everything looks calm and everything looks like we're out of the woods, but realize that there's still things in the background that could potentially be an issue. Now, lastly, we have the Kiwi, and you can see that this thing is not, we had a nice candle today, but this thing has not broken out yet. So same thing, they are in a downtrend. Either they are right at those levels or they are, below those levels, but we haven't really made a higher high here. So it all comes down to now, let's just take a look at some of the dollar crosses here, because, this is where if you take a look at the dollar crosses, you'll see like, oh, maybe this is ready for a breakout. Take a look at these 3-day candle on Aussie dollar. And you see, if you compare that to the candlestick on the equity markets, you see the similarity there. That's again, it's all because this move is all because of the equity move and all about this dollar move. So if this is going to break out higher, and realize that we tested this level right here just a week before, we tested that level and here we are again. So it's a good sign that is keep testing to the upside, but at the same time, it's not really broken out yet. And what will give me a confirmation it's going to break out? If it gets above that 63 area. Now, that will be a confirmation that this wants to go higher than lower. So, but like I said, it's not really done yet. So I have to be really patient here as far as my rules go. Now, if I trade this on a 4-hour chart, the question is, can I trade a 4-hour chart? Sure. In the anticipation for a breakout, if that's what you're trying to strategize here, then again, just have your stops in there. And if they get stopped out, it gets stopped out. And I know personally, I like things to break out confirmation wise before I enter. So it really depends on your individual strategy and personality. Now, if you take a look at the Kiwi, very similar thing, daily chart, it on Aussie, on Kiwi dollar is right there. So here we are with that level right there. So things can really break out or they can stall. I think that's really what you can see here, even in the past. Take a look at these levels on 20 moving average. We tested 2-3 times before it broke out. So, maybe it's on the verge of breaking out. Maybe Friday will be a great catalyst. We'll find out when we get the job support on Friday. But again, they're setting up nicely, and all pairs kind of look very similar. Here's the dollar CAD. As you can see, that dollar CAD had a massive tail on this candle, and we just pulled back for 3 days. So like I said, after a 3-day pullback, I wouldn't be surprised things stall at these levels. So dollar CAD is right at the moving average. Take a look at Aussie dollar, right at the 50 moving average. Kiwi dollar, right at the 50 moving average. Dollar Swiss franc, it's kind of right at the moving average. So a lot of currencies. So only currency that's way up below that is dollar yen. But if you take a look at pound dollar, right at the moving average. So you can see that everything is very similar right now. So we really need a bigger breakout in the dollar across the board to get us through those levels. But you can see that they are pausing are exactly at the level where it should. So I would kind of want to see maybe the next 24 hours, see a bit of a relief rally or something and then things probably set up for Friday, which I think Friday probably be a big day, because on Friday, either we get a big bounce or we get a big, breakdown towards those levels. And that's, again, going to really start to, shift that trend more to the downside in the dollar here. So that's what I'm looking at. That's why I wanted to go a little bit deeper in there. But, when we go into tomorrow, the first one, the pound dollar, probably be the first one on the docket here. You can see that we are right up against that resistance here. And with this resistance in place, we got a high right above at 1.2543. If you can get above that, we'll probably see more higher highs in this pound. But pound, again, depending on strong and weak currencies, we can take a look at, right now, euro is doing really weak. So let's see how the euro pound is doing. And you can see the euro pound is sort of doing a little terrible here. We got a massive breakout and a massive rollover. It's right at those levels here. So this is, again, showing more weakness to me, a little bit of rally here. Again, like right now it's a coin toss, so how the Bank of England rate statement is going to affect the pound. But depending on which way it moves, we can perhaps take a look at it. Let's see how pound CAD is doing. So you can see that even pound CAD is just kind of a little basing here. So I think the big question is the pound moving higher or lower? And depending on that, you can pick those currency pairs. If the pound is moving lower, I think pound yen has been this exceptional volatility. Take a look at this range from 193 to 190. That's a 300 pip range that you're dealing with here on this. So we got a support level right at 190. If it breaks at 190, it's definitely going to open some more window or door to further downside. But for now, it's kind of in the sideways range here. So in conclusion, where are we? I think the dollar pairs that we looked at, after the 3-day move, it might consolidate. And then Friday probably be the bigger one for, getting a big either breakout or a big reversal. We'll see. But I think that's really where we are. And the fact that we have that Friday job support, I won't be surprised if we see a consolidation here in some of the dollar pairs. Now, with the yen, I think that's another wild play. So, trade it carefully, because, one day it turns out to be really strong and one day it turns out to be very weak. And you just want to, like we look at the chart, buying on pullbacks is a better opportunity. We had a big move. I won't be surprised if the yen pulls back. And that pullback probably be better off to play on Friday with the job support. Pound is the only one that will be taking a look at tomorrow with the pound rate statement. But, we had a pretty exceptional last 3 days. After big moves, consolidations happen. So, wait for consolidations to clear out. And then I think probably be better to wait till Friday to trade the job support. Thanks for joining here. Happy trading. See you in the next one.